Introducing a new era for discerning Australian investors. Brought to you by Ausbiz and backed by deep market insight, professional analysis and a proven track record. Our focus is simple: to connect you with exclusive and compelling investment opportunities. Discover what's next at ausbizcapital.com.au. This program is brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.
Hello and welcome to the Global View on this Friday morning. It's wonderful to be here with you. I'm Nadine Blaney. Well, Wall Street was closed for Juneteenth Day. However, the specter of full-out war in the Middle East continues to loom, and U.S. futures are coming under pressure as we speak. Oil prices rose, jumping 3%. Brent crude hitting its highest close since January the 22nd, up 2.8% to $78.85 a barrel. Gold prices were little changed. Platinum slipped after scaling its highest level since September 2014, but spot gold was off by 0.1% at $3,365 per ounce. Copper futures dipped 0.1% and aluminium futures shed 1.2%. Well, the Bank of England held interest rates at 4.25% as expected, but said it's focused on risks from a weaker labor market and from higher energy prices as the conflict escalates in the Middle East. The world is highly unpredictable, Governor Andrew Bailey says, saying the bank will look carefully at the extent to which those signs feed through to consumer price inflation. The Swiss and Norwegian central banks eased monetary policy, pointing to weaker inflation. The SNB's rate now stands at 0. On the trade front, Canada's Prime Minister Mark Carney says the country could increase counter tariffs on U.S.-produced steel and aluminium if it does not reach a broader trade deal with U.S. President Donald Trump within 30 days. Trump increased import duties on steel and aluminium from Canada to 50% from 25% earlier this month, with the two leaders agreeing to wrap trade and security negotiations by July 21st. And sources are telling Reuters that European officials are increasingly resigned to a 10% rate on reciprocal tariffs being the baseline in any trade deal between the EU and the US. Bond markets were closed to observe that national holidays futures little changed. And the US dollar gave up some of its gains overnight, but is 0.7% higher over the week. The Aussie is under pressure despite the immediate threat of U.S. action in the Middle East waning. U.S. President Donald Trump says that he will decide within 2 weeks whether or not to strike Iran. Bitcoin coming under a bit of pressure as well in this early Asian session. Well, for more on global markets, as well as those central bank decisions in Europe, I caught up with Fiona Cincotta from City Index a little earlier. And we began by talking about the real sentiment impact that the Middle East conflict is having on traders.
I think that's fair to say that. I mean, it has been a busy week as far as central banks are concerned, but I think it's really interesting that that wasn't what was necessarily moving the markets. So although we heard from the Bank of Japan, we heard from the Federal Reserve, we heard from the Bank of England, the Swiss National Bank, despite all of that, really all eyes are on the Middle East, what's happening there, what's happening with oil prices as well, because obviously that does relate to central banks. If we're seeing that persistent increase in oil prices, and there are obviously concerns that that could then start to bleed over into higher inflation. So there's a lot to be watching on, but headline trading is what's been happening this week.
It is incredible, isn't it? So it's unknown what will happen with the situation in the Middle East. Still, though, what you're saying is the likes of Bailey at the Bank of England did reference oil prices in particular in relation to the Middle East?
Yes, that's right. So it's really interesting. So already the central banks have got it very much on the radar. Once bitten, twice shy, I think the phrase, isn't it? Obviously, Russia invading Ukraine is not that, it didn't happen so long ago, and that sent oil prices sharply higher, and the inflationary impact of that we're still sort of, coming out of now as the banks cut their interest rates slowly back to neutral levels. But yeah, so the Bank of England didn't cut today, but it did highlight that the risks for inflation was still double-sided. So although we've seen inflation in the UK gradually cooling towards that 2% target, it did just pop up recently in recent months to around 3.5% and eased to 3.4% in May. It's still a little bit higher than what the Bank of England would be comfortable with to be cutting aggressively. We've seen service sector inflation ease in the UK. Again, more than expected, but still not to a level that the Bank of England will be comfortable with. But despite the fact that they're seeing underlying weakness in the economy, signs of a loosening jobs market, signs of weakening wage growth, so that does point to inflation, domestic inflation cooling. But as we said, the Bank of England did notice and did note the two-sided risk to inflation, and that is because of the rising oil prices and the conflict in the Middle East.
Okay, really interesting dynamics right now because, of course, it appears, at least according to sources talking to Reuters, that in the EU, they've sort of resigned themselves to the fact that there will be a 10% across the board tariff put on goods. So how do tariffs and the potential specter for further tariffs weigh into, the decisions that we had from other European central banks, including the SNB?
Yes, so I mean, it does feel like there is still quite a bit of an element of the unknown as far as trade tariffs are concerned. There does feel that there is that 10% universal tariff. We'll find out more about what's happening as far as reciprocal tariffs are concerned in the early July. I think July 9 is the deadline if it doesn't get pushed out further. So over the next couple of weeks, we're going to be finding out more about what those levels are going to be. Now, what's interesting is as far as the Eurozone is concerned, then we were expecting that to potentially have a deflationary impact. Inflation in the Eurozone is already at 1.9%, so below target. But the rate decision that we saw today, which was really interesting, was the SNB, as you pointed out. They're back to 0%. They cut by 25 basis points, leaving the door open for further cuts in September, potentially going into negative territory as we're seeing sort of global growth potentially slow, as we've seen the Swiss franc really benefit from that rotation out of the US dollar. So that's making it very much for a disinflationary process in Switzerland, where imports are now significantly cheaper than they were at the start of the year.
Was that a surprise that the SNB cut rates to zero and foreshadowed that they could go even negative?
I don't think it wasn't a surprise that they cut rates. That was expected. The fact that they are sort of going potentially into that negative area, that does feel like a threshold, which obviously hasn't been crossed for quite some time. So I do feel that is it's something that the market's going to be watching very closely. And obviously those comments were taken on board. But it was quite interesting because the Swiss franc's reaction actually was to rise against the US dollar following that cut, and expectations now growing for a September cut. So I think, it does feel that we are moving to an area that we've not been for quite some time as far as negative rates are concerned.
Yeah, Fiona, it's just fascinating. So you mentioned the Swiss franc. What were currency markets like overnight? Obviously, we had the US closed for Juneteenth, but we had all this central bank action coming through in Europe. I believe that the US dollar was slightly mixed. I mean, the Aussie was weighed upon purely because of this risk sour sentiment. What happened in currencies?
Yeah, it was quite interesting. I mean, we didn't see massive volatility at all, obviously, given the Juneteenth day in the US. We saw mixed trading in the US dollar, so it did start the day stronger and actually then ticked lower as we headed through the afternoon. As far as the pound is concerned, again, mixed trading following the Bank of England interest rate decision. Immediately, there was a slight decline in the pound against the US dollar just because of the vote split, which was slightly more dovish than perhaps what we'd have been expecting. But then the pound did actually recover against the US dollar, just modestly 0.1% higher. Same with the euro, no massive moves. I think the euro is showing a really interesting level of resilience, still up at that 115 level against the US dollar, despite what we've seen going on, despite the fact that the outlook for the economy is a little bit weak, and despite the fact that we've got inflation below target. I think the euro is still holding up as a good alternative to the US dollar just because of its liquidity and because of its stability. So yeah, that's what we've been watching.
And Fiona, is it safe to say that potentially traders won't want to take on a lot of risk heading into the weekend with this unfolding situation in the Middle East?
Yeah, I think that's a really good shout. I think there is going to be very cautious trade as markets open over into Friday, particularly as we see traders come back in the US after the bank holiday today. And obviously there is a lot of uncertainty with regards to what could happen next in the Middle East. Trump has suggested that if he's going to make a move, it will be, or he'll make the decision within the coming weeks. And so, yeah, I mean, there is going to be an element of caution as we head into the weekend.
So there you go. That was the night in Europe, central bank action. We are expecting to see a bit of a dip at the open here locally when trade gets underway in just a few minutes' time by about 23 points. Look, it's a pretty quiet one on the economic front here locally. We do get the Philly Fed index in the U.S. tonight. New Zealand markets are closed. I question, as we discussed with Fiona, whether or not people are going to be willing to take on a lot of risk as the headlines still come fast and furious from the air war between Iran and Israel. So plenty to digest, plenty to get you across. Great interviews coming up as well. We'll take you through the open next.
This program was brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.